Welcome to Sustainability Leaders. I'm Michael Torrance, Chief Sustainability Officer at BMO. On this show, we will talk with leading sustainability practitioners from the corporate, investor, academic, and NGO communities to explore how this rapidly evolving field of sustainability is impacting global investment, business practices, and our world.
The views expressed here are those of the participants and not those of Bank of Montreal, its affiliates, or subsidiaries.
Hello all, my name is Jayen Veerapen. I'm a senior advisor with BMO Climate Institute. On this episode of Sustainability Leaders, I have a pleasure to welcome two guests. So first, Pooja Khosla, CEO of Entelligent, a Boulder, Colorado-based company that has developed an analytical tool to assist the financial industry in understanding the future impact of climate change and the energy transition. And I also have a pleasure welcoming Fabrice Tenga, Managing Director and Head Equity Derivatives Financial Engineering at BMO, who, among other things, leads a collaboration between BMO and Entelligent to develop financial products to manage energy transition risk. In our discussion today, we will focus on energy transition risk, Entelligent's work in this space, and BMO's collaboration with Entelligent. Pooja and Fabrice, welcome to the show. Thank you so much for being here today.
Thanks, Jayen. It's a pleasure to be on a show with you.
Hello, thank you, Jayen. Pleasure to be on the show as well.
Pooja, let me start with you. Would you please introduce yourself and also please briefly tell us what Entelligent does?
I'm Dr. Pooja Khosla, CEO and co-founder of Entelligent. For over 17 years, I have worked at intersection of economics, statistics, and climate finance. As a researcher, academician, and entrepreneur, developing forward-looking solutions that help businesses and investors manage risk, capture opportunity, and drive growth. What Entelligent does is that we provide climate and energy transition insights to investor and corporations. So we live in a very fast changing world, and we see that how we consume energy and at what rate is changing very quickly. Additionally, on top of it, the supply of energy, the global policies around it, the sources from energy is coming, like coal, oil, gas, or renewable sources, is also changing very fast. These changes impact profit and loss account indicators of the corporations. These changes also impact balance sheet indicators, like creating more stranded assets for investors. So Entelligent provide that niche, actionable insights to investors and to corporations to de-risk themselves and to prepare themselves for future.
Thanks for this introduction, Pooja. Fabrice, same idea. Could you please briefly introduce yourself and your role at BMO?
I basically serve as a managing director and head of financial engineering for the equity derivatives department at BMO. I joined the firm in December 2024. And in my role, I lead a team that design and structures innovative financial products, particularly focusing on equity derivatives. My background is quantitative finance, and I've spent the majority of my career working on developing investment and hedging solution strategies for customers of, I would say, across the planet, because I did work in Europe and in the Americas, in the Asia-Pacific region. And to come back to today's topic, I would say that over the past few years, we've seen in the market that like a growing trend towards the intersection between finance and sustainability. And here, specifically at BMO, we have started looking at how we can address the risks and opportunities presented by the energy transition.
Thank you both, Fabrice and Pooja, for this introduction. And before diving deeper into solutions and collaborations, I would like both of you to help us understand why we talk of an energy transition and why does it matter to understand and assess the impacts of the changes in the supply and demand of energy. Pooja, why don't you lead us off? You've been leading Entelligent for about 10 years now. focused on energy transition. What do we mean by energy transition, and why is it important to understand the impacts of this change?
I would say that we live in a world where energy transition is very real. Look at how many of us are now driving electric vehicles or have solar panels powering our house. If you will look that in a macro framework, Europe is on a way where it will have 50% of the renewable energy capacity. China leads its electric vehicle adaptation globally, and 7% of the fleets in China are electrified. In US also, we are seeing a lot of shifts of these trends, which are coming on how we are consuming the energy and what sources of energy we are consuming. So this energy transition is very real from consumption point of view. Now look at from industrial point of view. Now I think every one of us are using AI, ChatGPT, other AI applications, and research forecasted that this increased use in AI will increase the demand for energy only through data centers up to 9 to 10% in 2030. That is the next 5 years. So from where are we going to supply that power? That reminds me of a beautiful quote and a very authentic quote from Sam Altman, the co-founder of OpenAI, that the cost of AI will converge with the cost of energy. Intelligent will scale as far as the grid allows. So that is why energy is very centric, and reading the signals from energy is very centric of the world in today and world in future we are building.
So to come back with what you just said, Pooja, obviously there are opportunities associated with these changes, but there are also risks. And can you tell us some of these risks that you work on and you've identified?
So when we talk about climate transition risk, it can be fragmented into a couple of risks. First is the policy risk. Policies are changing very fast. And if you will look at in Europe and Asia, these policies are very fragmented. But when we talk about companies, the companies are global and they have to make sure that they attend to these fragmented policies around the globe with their services or with their products. So first risk in the category of transition risk is this policy risk. Second is the technology risk. Every company right now is on a process of changing the technology. If you will see that companies are reconsidering their energy demand, some big tech companies are also putting power purchase agreements in place. Nuclear energy is coming into picture as an energy source more powerful than what it was before. So all these changes may cause assets of the companies stranded. And these stranded assets could cost hundreds of millions and billions for global companies on an aggregate. These stranded assets is a great risk also. And third, consumer demands are also changing. Like we see millennials and Generation Z in their purchase decisions, sustainability or renewable or carbon footprints are factored, whether they are buying a car or whether they are buying a jacket. They will make sure that their choices of purchase or demand match with what their belief system is about the planet or climate or consumption patterns. That could impact companies' revenues. So whatever we see, that comes under the category of market risk. So technology risk, market risk, and policy risk are three major risks that comes under the umbrella of transition risk.
Thank you, Pooja, for explaining us, energy transition and the various risks. Fabrice, if I bring you into the conversation, At a high level, I understand derivatives are a financial instrument to mitigate a downside risk. Is that fair to say? Tell us a little bit more about, the development of derivatives that you work on and what's the purpose of these derivatives.
Yes, indeed. I mean, as you mentioned, at a high level, derivatives are financial instruments. What they do is that derive their value from an underlying asset, an index or a rate. Typically, this is what they do. So they are primarily used to hedge or transfer risk between parties, but they can also serve other purposes. For instance, derivatives are often used to express a view on the market and provide leverage exposure to an underlying asset. So it means that investors can gain like a greater exposure to potential price movements with a smaller initial investment. In the context of energy transition, derivatives can help manage risks related to price volatility, regulatory changes, and market shifts. I think Pooja mentioned all these risks. For example, you can use options and future contracts to hedge against fluctuation in energy prices, or create structured products that provide exposure to, let's say, for example, a renewable energy index while limiting the downside risk. You can use derivatives to do all this. I would say also mention in the context of equity derivative products, the energy transition can be viewed as both an opportunity and a thematic investment. This is how we see it, how we view it, and how we want to propose it to our customers. I mean, the thought process is, I think it has been well explained by Pooja. Corporates, at the end of the day, will be facing energy change, energy transition, impact company operations and business, and eventually impact company performance. What we can do in derivatives is use it to provide customers with exposure to a custom basket of stocks or indices that are poised to benefit from the shift towards renewable energy.
Jayen, I would add two things to what Fabrice said. One, yes, the exposure is of sectors to energy transition, to climate scenarios, which are low carbon relative to climate scenarios, which are current policies, are very dynamically changing. And these changes are not long-term changes. These are very fast changes that we see translating into sector or stock premiums. I'll give you an example over here. From 2024 June to 2025 June, we all have seen massive penetration of AI. During this period of just 1 year, we saw that technology companies like NVIDIA or Microsoft, which had positive premiums for low carbon scenarios, like 2-degree scenarios, now have negative premium for those scenarios in June 2025. Because the energy consumption of data centers, cloud computing is increasing more than the rate we ever expected. And that change in premium is reflected by the data that Entelligent provide. Second example, that we saw that over the years, the utility companies, and the fact is that 80% of the current global power is still coming from traditional fuels like coal, oil, and gas. The premiums of utility companies, even for low carbon scenarios like 2 degrees in climate change from 2100, has also significantly increased. So that means that these demand for energy is increasing, and even in the future markets that are attracted by low carbon, these still profitable.
Thank you, Pooja and Fabrice. And one of the things I can infer from what you're saying is that the energy system is changing, but that changes, it not only has risks, but also has opportunities. And what you're doing, both of you, is actually help clients navigating these opportunities and risk. So Pooja, if I follow-up question for you, our audience members are not necessarily experts in the field, but could you please give us some insights in your methodology for assessing energy transition risk?
From methodology perspective, what we do is that we have in-house climate and energy models. So what climate models do is that They see how emissions are impacting our Earth systems, like what is happening to sea level rises or what is happening to temperature changes. On top of that comes integrated resource assessment models, where we make sure that we take into consideration the economic dynamics like population changes, inflations, gross domestic product, and energy dynamics, that how the demand of fuels like coal, gas, nuclear, renewable is going to change, how supply of these fuels will change if earth patterns and resources are going to change. So these models can project supply, demand, and prices of energy for multiple scenarios. Like, what will be the demand for coal currently? What will be the demand of coal if we live in a world where policy is very conservative, high carbon border taxes like in Europe, and renewable technology significantly changes more than what it has in transport and building sectors? I think nobody knows what scenario we will end up in 2100. And I think many of us may not be there in 2100 to challenge that. I said so. So the scenario analysis is very important. So once we find these demand, supply, and prices of energy sources for multiple scenarios, with our using big data, AI, we map these energy sources with company level in financial indicators, like how is it going to impact the returns of the company? How is it going to impact the revenues of the companies, cost of the companies, stranded assets? So this translation happens at Intelligent, and we have done these translations over 5, 10, and multiple years. So investors can see and get value of these translation for a particular stock in multiple scenarios.
Thank you for these explanations, Pooja. So end product, is it fair to say that, when you apply your methodology at the end, you're ranking, you're scoring companies in terms of their exposure to energy transition risk?
As I mentioned, is that we ourselves are using a lot of modern technologies. So our coverage is very expansive. We cover 40,000 global stocks, publicly traded stocks. And for all sectors and stocks that are traded in popular indexes like S&P or MSCI or Stock 600 in Europe or APAC markets, we have a very, very strong coverage.
So with this universe, what you're doing, you're scoring them in terms of their exposure to energy transition risk, that wide universe. So it's not only energy companies, it's the whole universe of companies.
Right, because at the very end, every company is either a producer of energy or a user of energy. So energy transition, yes, it impacts power companies, utility companies, but it also impacts technology companies that have a strong demand or and use that energy component. It also impacts strongly the finance sector because the funding of these companies are coming from the finance sector. So we live in a very interconnected ecosystem of energy. So the coverage is expansive. But I understand why are you asking this question. The impact of energy transition may be different across sector and regions. So when we produce our data, we do normalize our rankings within a sector. And in fact, when we work with our partners, they also take indexes and they normalize the rankings within the index or within the regions and sectors to get that comparative sense.
What's interesting also is, it's energy transition is a cross-cutting theme. It's not only companies that we might think are involved in energy. It's really across the whole economy. So it's really a whole economic kind of transition. So Fabrice, if bring you into the conversation about what are BMO's client after in this space. So can you tell us a little bit about what are the clients' interest in energy transition, especially energy transition risk, which I believe is what you focus on. What are the clients after in this space?
I would say that our clients are increasingly aware of the financial implications of the energy transition. They are looking to understand how the investment will be affected by changes in energy supply and demand, but also, it has been mentioned before by Pooja, these regulatory shifts and technological advancement. So they have a particular interest into identifying and managing transition risks. Additionally, we also have pension funds and more generally asset owners who are keenly, I would say, focused to ensure that their portfolios are resilient to the risk posed by the energy transition. And at the same time, they want to capitalize on the opportunities behind that. So also all these customers, at the end of the day, they are looking for tools and products that can help them to navigate the complexities of the energy transition so that they can align their portfolio.
So, Fabrice, can you tell us how the collaboration with Entelligent started?
I will say that the collaboration with Intelligent began when we recognized that there is a need for sophisticated analytical tools to better assess and manage energy transition risks. At the end of the day, in order to do that, Intelligent expertise is in, I would say, developing predictive analytics for climate-related financial impacts was kind of the perfect partner for us. So concretely, we designed an investable index. And when I say investable, there are various components. Of course, we use intelligent technology, but what we must also be attentive to is the liquidity. So how do we select the universe of stocks? And who are our customers? So here, our focus was customer base in the US. So basically, naturally, we'll be looking at US companies as a global universe. And since we care about liquidity, our focus was US large cap companies. And then basically what we did in order to build that index, which by the way is completely rules-based, is to put in place a best-in-class type of selection methodology using some scores produced by Intelligent. So that's the way we build that investable product, which is basically a custom basket that is reweighted every month based on some scores produced by Entelligent.
Pooja, is there anything you want to add on what Fabrice has just said and the collaboration with BMO?
So what I would add to what Fabrice said, that as mentioned earlier, that the energy transition insight we provide are to achieve two goals. The first goal is to de-risk the investment strategy. And second is to capture the opportunity where the economic return puck is going, in what sectors and what companies, and capture that. So the work that we have done together is an index, and index is backtested for 10 or more years. And we see that the index achieves those two check boxes, that the performance of the index is better than the market benchmark of North American companies. And also financial ratios like Sharpe ratios, that is adjusted return and risk performance, is also superior relative to the benchmark.
Thank you, Pooja and Fabrice, for a wonderful conversation. I look forward to continuing to follow your work in this important space. Thank you.
Thanks for listening to Sustainability Leaders. This podcast is presented by BMO. You can find our show on Apple Podcasts, Spotify, or your favorite podcast player. Press the follow button if you want to get notified when new episodes are published. We value your input, so please leave a rating, review, and any feedback that you might have, or visit us at bmo.com/sustainability leaders. Our show and resources are produced with support from BMO's marketing team and Puddle Creative. Until next time, thanks for listening and have a great week.
For BMO disclosures, please visit bmocm.com/podcast/disclaimer.